Hi guys. I hope you're all well. This is chapter 4 on professional responsibility and liability, and this chapter is really about compliance, and really the first frame to look at this from is through the eyes of the actual businesses. And typically, as auditors, we don't naturally go along looking to see whether businesses are compliant within their own industries. But of course, at this level, we're interested in this because this, of course, affects, if you like, the final output of the numbers, or risks, if you like, the integrity of those numbers, because there may be potential liabilities as a result of a lack of non-compliance. So really, what we're starting off here to look at is this question of compliance, and our responsibility, if you like, towards whether or not we have noticed or observed compliance and how we react. So the objectives really are about the laws and regulations, how we deal with fraud and error, and our responsibility towards fraud and error within organizations when we see financial statements. And again, this question of our own professional liability and potential negligence if we are not careful about how we deal with this. So again, like I say, from the point of view of the exam, the focus is really they're trying to make sure you understand the responsibilities of management towards compliance, and also our responsibility towards observing these requirements, if you like. And like I said earlier on, all industries are really needing, of course, have to regulate themselves. They have to think about whether or not they're compliant within their own industries. So we have the car industry, the food industry. I'm sure you see these. You walk past restaurants and you see the sort of hygiene sort of grading. They have to take courses, if you like, of course, to ensure the health and safety of their clients. So we're not really talking about outlandish ideas here. Of course, in the oil and gas sector, we have seen a flurry, if you like, of cases where we have had oil leaks, if you like, into the sea to the detriment of the environment, if you like, in water life. And so this is one big area definitely where we see a lot of compliance. This is quite critical. And we observe a lot of compliance here as well. The construction industry, of course. So many of these industries will have their own internal regulations. So they'll have internal, if you like, ISOs, if you like, that they have to follow to make sure that they're keeping their workers safe, that the actual materials they're using are safe, that the integrity of their buildings are good, because of course there are legal suits that can come back if it is found out that buildings collapse or people lose their lives, if you like, on these building sites. So a range of issues to do with compliance. And of course, something probably closer to us is this question of banking regulation. And the amount we have enough evidence to see what the consequences are. We've just recently had come out of a crisis in 2008 to 2010, a banking crisis where really due to a lack of compliance with balance sheets, banks having to have their balance sheets at certain amounts, certain percentages, if you like, the composition of their assets, many of these banks failed to comply with a lot of these things, which of course meant that when we did have the banking crisis, we had, of course, this feed into every sector of the economy. So what we're looking at is really trying to understand what happens when companies refuse to comply and how we deal with it. Again, because yes, it doesn't we won't naturally see that on the financial statements, but we're really trying to understand what inquiries and what procedures do we go through to ensure that we have captured a lack of a situation of non-compliance, because that now allows us, if you like, to then make judgments about going concern, if you like, to focus a bit more on particular areas, if you like. I just want to bring your memory back, or bring your remembrance back to what's referred to as the diesel due. And this is when Volkswagen overstated, or if you like, manipulated their software in their diesel engines. So you can see here, it just says here, hopefully I can write on this here, just to show you this question of compliance. The question of sometimes with compliance is there's always this relationship with lack of non-compliance slightly linking into fraud and into misstatement and misrepresentation. So it's a spectrum really of trying to understand what the real story is. So the Volkswagen emissions scandal, dubbed the diesel dupe, it says here that the Environmental Aid Protection Agency found that many Volkswagen cars being sold in America had a defeat device or software in diesel engines that could detect when they were being tested, changing the performance accordingly to improve results. I suppose you could almost call that fraud. In effect, this was very popular because in effect they weren't compliant with, if you like, the emissions that were required. And so they were cheating emissions tests in the US. So they had, you see, all very strong relationships with trying to push trying to meet certain benchmarks, if you like, probably within, of course, your industry. So to dominate markets. So major push to sell diesel cars in the US, backed by huge marketing campaigns trumpeting its cars as low emissions. And this environmental agency covered 482 cars in the US, including a number of models. And Volkswagen admitted that only about 11 million cars were fitted with this so-called device. And so they were accused here of modifying that software. And they said they found irregularities in the CO2 emissions. And it ended up with Volkswagen having to pay, and still in court actually, with the US authorities as to how to move forward on this. So we have, of course, this question of compliance really, of course, I've just shown you one example when we're talking about the actual industry. But we can also have straightforward failure to comply with the standards. Compliance is a big word. It's really, we as auditors are constantly, we're likely to pick this up, of course, in our work. But picking up the other events, like what happened with Volkswagen, we won't see immediately on our financial statements. It'll be more due to active inquiry. This is another case where Tesco's had overstated their revenue, and Tesco's here faces a $100 million civil lawsuit. But you had other institutional funds, if you like. Basically, you had all this, of course, because their revenues were really good. You basically had funding flowing in to the organization and people buying those shares that drastically fell. Key point here is that their profits were overstated or misstated, if you like, by 246 million. I mean, I think in a previous class I showed you a chart with Tesco's revenue, something that looked like that. Tesco's revenue was all the way up there, and they had that number of employees, and you had Microsoft or something along those lines just here as well. But the Tesco's just had this ridiculous, extensive revenue in that period because they had overstated this contract. They recognized revenue early. And so what you really had was not just that, you just really had just creative accounting, false accounting, if you like, and potential misstatement in a number of figures. But the point really here was this 246 of income that had been included in the first half of the year, if you like, that shouldn't have been there. Currently, MasterCard are undergoing, right as we speak right now, well, this is 2020, MasterCard are currently undergoing an investigation as well. Let me just take you out of this, and hopefully we can click on, we come out of here, click on this. Can I open this? Let's see if I can. I'll just cut and paste this out of here into a screen so you can see what the story is about. Just to give you a framework about what you're really trying to do is, imagine you were going in to do this, to carry out an audit on this business. You want to be aware, if you like, of what's happening externally. So this paper is, you can see here, this is an 11th of December 2020 paper where MasterCard were accused of overcharging, if you like, allegedly overcharging 46 million British consumers during a 15-year period, if you like. So there is the argument is that there is a potential that people will receive a payout. It's still in court. But the point there is that you have a failure of compliance by MasterCard. And there have been a number of banks that have undergone or have been accused of either overcharging. I mean, we had, if you like, just coming to an end, probably tied up now, where banks had been, if you like, causing their clients to take out unnecessary insurances they didn't need. So there we are. You can have a failure of compliance. This is another sort of a final slide to highlight what the consequences are of banking lack of banking compliance. You had that sort of domino effect, really. This question of taking on mortgages or issuing mortgages, if you like, that weren't where there was a strong unlikelihood that you weren't going to receive the regular interest from your clients, and of course slicing those assets and mixing them up with cleaner assets, of course, and making them sellable and selling them on. And of course, what did that lead to? You had an almost collapse of the entire world economy. Okay, I think it's good I do these videos in 10 minutes so you can do them in little short briefs, and then I'll carry on in part 2. Okay.